on the FATCA legislation and its application at international and EU level. I'm happy to invite Professor Carlo Garbarino from the Bocconi University in Milan to take the floor. We are very proud and happy that you're with us, and we look forward to participate in the exercise and follow your observations and maybe also your recommendations.
Thank you. How much time do you have? 15 minutes?
15 minutes.
Okay. So thank you very much, and I am very honored to be here to speak at the Committee on Petitions. It's the topic we are talking about today appears to be kind of a dry technical topic, but it really is a lot of practical implication for everybody. So if you bear with me a little bit, I will try to explain this complexity and to show a few relevant aspects. So essentially, I have to give you a little bit of historical overview. Generally speaking, countries tax their residents on their worldwide income, so they do need to have information on their bank accounts and activities in other countries. And the way to do that is the exchange of information. So one country requires the other country information about its own residents in that country, and usually this exchange of information is based on reciprocity, and it's found in the main treaties. There are also tax information exchange agreements. And, in the last 10, 15 years, there has been a campaign to force tax haven and offshore jurisdiction to provide that information. In 2010, just after or during the financial crisis, the United States enacted this Foreign Account Tax Compliance Act, acronym FATCA. And at that time also there was an evolution, and now there is essentially automatic exchange of information. So databases of the tax administration routinely exchange information about the taxpayers. The FATCA essentially is a very bold unilateral move, because differently from any other situation before, the U.S. force all banks, wherever located, to provide information about U.S. residents. If these banks don't cooperate, are subject to a sanction in the United States, which is very effective because all banks have operation in the United States. The United States, to apply this FATCA, have concluded international governmental agreements with several EU member states. These are truly international agreements and provide sometimes for an obligation of the governments to enforce this obligation. So the question I was asked to refer about is what are the criticalities of the impact of FATCA? So you have to take in account that FATCA is truly a unilateral move. It's an extraterritorial measure, so it takes, it's enforced even if, the banks are not located in the U.S. And we will get back to this point. Essentially, it started as a reciprocal exchange of information, but then eventually ended up as a unilateral, unidirectional form of information given by the EU member states to the United States and not the other way around. So, when FATCA was adopted around the world and in Europe, there were, has created systemic negative externalities because of course, the banks have a very high cost in making all this reporting, and particularly there are many problems with national legislation. But particularly, that was the triggering point of this. I think it's one of the main points of this petition. there is a very intriguing aspect of the U.S. legislation because it's the only country in the world, together with Eritrea, to tax taxpayers on their worldwide income under the condition that they are just citizens and not residents. So there is a class of European citizens that are also American citizens, but not because they have very strong links to the United States, but because they were just born in the United States. So they don't have real links. But because the machinery of the FATCA imposes the reporting obligation on the banks about all citizens of the United States, then the problem is that these European citizens that are by chance, accidentally also American citizens are required, the banks are required to provide all this information. This has led to a situation in which many banks had, commercially refused to provide services to these citizens, or even if these citizens are accepted by the banks, they have to provide, having no ties with the United States, they have to provide all sorts of information, and this is very, very complex. But I would like to say that this petition is today, it's just 10 days from the entering into force of the General Data Protection Regulation, which is a wide-ranging regulation that most of you know probably that now at the European level protects, creates a new fundamental right, the right to data protection, which is different from the right to privacy. The right to privacy in tax matters is not really relevant because there is a predominant interest of governments to know everything about taxpayers to tax them. But the right to data protection is an additional right, and also and is shared in the exchange of tax. The exchange of tax information shares this right with all other areas of big data online information. So the point that I think it's important to make here is that when European governments and European banks provide to a third country, the United States, information about EU citizens, then there is a requirement that the GDPR is complied with. So in addition to these kind of idiosyncratic criticalities of the FATCA, now I think we have a main problem about protecting, data protection of European citizens. And of course there is a tension, usually there is a tension between the interest of the state and the interest of the individual of not being intruded by the state. But if you can read the fine printing there, Article 23 of the regulation says that any kind of restriction, including restriction in the tax area, must respect the essence of the fundamental rights and freedoms, and it must be a necessary and proportionate measure in a democratic society. So now the point I think which is important is that the United States are requiring tax information to protect their national interest, not the national interest of individual member states. And this is particularly evident considering that there is a lack of reciprocity. So if the societal value that was to be protected was the common interest in reducing tax evasions on both sides with a reciprocal exchange of information, then of course the restrictions to this transfer of data to the United States would be more justified. But because there is a kind of unilateral the flow of data, there is less justification for this exchange. Particularly, I would like to emphasize that there is an entire chapter of the GDPR which is relating to the transfer of data to third countries such as the US. This applies to all kinds of data, not only tax data. And the rationale, the reason of this, it's obvious. The European Union affords a significant protection to data with transparency, accountability, and other safeguards. So when in a globalized world data are transferred to a third country, we as Europeans have the position that this data can be transferred under the condition that they maintain the same safeguards. So there is also this additional problem under the GDPR. So let's go to what I think are the conclusions or the policy suggestions that could be considered by this committee and possibly be then implemented by the European Union institution. Here, of course, we are dealing with another major jurisdiction, the United States. So, politically speaking, it's a kind of delicate issue. And, of course, first of all, there are bilateral measures. Then there can be unilateral measures either from the EU side or the US side. But last but not least, I would like to emphasize that we in Europe are the champion of multilaterality, and I think that multilateral policies are essential in this area because nobody is denying the fact that there is a global need, multilateral need to fight global tax evasion, but if there is such a need, this must be multilaterally implemented and monitored. So these are practical suggestions. The first thing would be for the European Union possibly to renegotiate with the United States these international agreements in order to align them first with the data protection of the regulation and renegotiate them to make them truly reciprocal. So these are, I think, are two requirements. They are kind of reasonable, and the U.S., even under this administration, should at least listen to these kind of requests. Then, as a second best or a measure that would be instrumental for the negotiation, the EU can take unilateral measures. So if the United States do not honor the duty of reciprocal information, then I think we have a right to, at least the European Union might have a right to announce some kind of blocking legislation. So this would mean that blocking certain data, the transfer of certain data, until the reciprocity is re-established. And in addition to that, of course, blocking legislation could be possibly considered in respect of data that do not meet the protection of the of the regulation on data protection. So until that time, withdrawal of the transfer of information. One important aspect that it's a unilateral EU policy, which is not a top-down policy, but it's a pervasive policy, is the fact that in the under the European Convention on Human Rights, there are two important provisions: Article 8 against non-discrimination, Article 14 about the protection of privacy and family life. So it is possible, I can envisage that the court might take cases and, on a case-by-case basis, hold that there are intrusion on the family life and private life of accidental Americans in particular, or discriminations because normal European citizens are, of course, not denied banking services, while certain categories of European citizens, because of FATCA, are denied of such services. Of course, there are policies that the US could take, and the European Union could advocate these policies. Of course, it is a decision that must be taken by the American legislatures. There is the citizen-based taxation is currently under scrutiny in the US because it's an overreach of tax claims of the United States. So because of the obligation of these banks around the world, all sorts of accidental Americans are now called by the IRS, and they have to refer and transfer data that are really unreasonable. So possibly the United States could mitigate the obligation under FATCA, so raise the threshold for reporting to, for example, now it's $50,000, could be $500,000, or eliminate completely the obligation for accidental Americans, or make it possible for accidental Americans and American citizens to exit from U.S. citizenship at no cost. Now it's incredibly difficult. Last but not least, in the last few seconds I can use of my time, and I want to be punctual. I cannot emphasize more the need of a multilateral approach in regulating the exchange of information. There is, since 2010, a global framework for the exchange of information. The United States did not adhere to this multilateral framework. So I think that the multilateral table for global exchange of information would be highly advisable, also considering that when the exchange of information is multilateral, it could be renamed in sharing of information, which is clearly more equitable. So this is it, and I think I really used up all my time with a few seconds of delay. And thank you very much for your attention.
I thank you very much for your presentation and also for leaving this paper to us. It's very, very good and will be helpful in days to come.